not reality.
Welcome to Momentum Monday. Today's March 6, 2022. Howard, you're on the road.
Do you have an easy bake oven in the background? You're making stuff? Are you wooing somebody? Are you wooing? Are you doing the Bulgarian love dance? Is that what you do? You bake for people?
I bake occasionally, yeah, for myself and for my girlfriend, yeah.
Okay. You're still off the market is what you're saying. Because I get a lot of emails from ladies asking if you're
yeah, I'm off the market. So back to the financial market.
You're like the aluminum of people. Oh my goodness, look at that chart.
So this is
so easy to trade this. So easy to trade oil.
Of crude oil, of the Brent crude oil, which is the one which Europeans buy and use, as you can see, close to all-time highs. What it has doubled since 2021, up more than 50% year to date. And it kind of reminds of that big move which we saw between 2007 and mid 2008, when oil went from 60 to 140 and kind of preceded the last big recession that we had. And it's not just oil. I mean, like all the other commodities are rising. Coal, all the soft commodities. If we take a quick look, actually, let me put the videos down because people are complaining about the charts. So monthly charts, you can see sugar, coffee, orange juice, especially the grains, since Ukraine
wheat, like this
accounts for 25% of the world. Wheat, look at this huge push. And all of them, I mean, definitely.
Hearing semiconductors too, that Ukraine's got a lot of parts for, or I forget what part, maybe rare earth stuff for semiconductors. So it's going to be another really tough week for tech. It's still, people are just mispositioned. You know, there's one thing to believe in tech as I do, but there's just so many warnings. Like I'm high cash, but like never high enough. I mean, if you look at this, I'm just blown away because I've been listening to commodity podcasts just to try and get myself smarter. But I was a really great podcast. I linked on my blog today, Ivan. You should actually listen to it. It was really fantastic. But the guy was walking through the Alcoa financials and fundamentals, and these companies have just completely delevered their balance sheet. So they're printing money before this spike. I just cannot. I mean, I don't know how to analyze companies that don't have revenue. You know what I mean? I'm just so used to, you know, fast growing revenue businesses. And, you know, that's what happens in the market. Everybody finally learns how to like try and figure out how to read the market one way. And
then the market turns, yeah.
Market turns, not just turns, but like completely confounds people.
Can you imagine? Switches gear, yeah.
We went negative oil to 130. Alcoa, you know, was a I don't know, tiny in the global markets. You know, China controls.
It was a $5 stock less than 2 years, exactly 2 years ago, and now it's
correct
90.
And their earnings are just ramping up, right? Like they're going to have pricing power for the next 3-4 years, and they've delevered. So I was listening to this great podcast about how this thing could be, you know, earnings of $15-20 a share over the next year or two. I mean, that's just insane. But, you know, so you're getting back to being valued on free cash flow and on earnings per share. And every hedge fund is over indexed to tech, right? Think about all these hedge funds that were actually, they couldn't get enough tech, so they went into the private markets to compete with guys like me over the last 2 years. And now Kathy's trailing the QQQ. Like Kathy's trailing since inception the QQQ.
I mean, she wishes she's trailing IPO, like more like the IPO.
No, but she's also not trailing QQQ since the start. So again, there's many lessons here. Is that and Warren Buffett's with United Pacific and with Apple. If you look at United Pacific.
It broke out all-time high. Yeah, definitely.
All-time highs. And these things, I'm reading about their numbers. I'm forgetting the revenue growth. And obviously the consumer side of their business sucks. And they hate their customers, blah, 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 blah. And coal, which is what they ship most of, has dropped, you know, 70% over the last 20 years. So these companies have so much if if US brings industrial back, which they're going to have to do in countries. So you've got Alcoa and these and the United Pacific and CI. These companies are set up with just so much power, and I just forget. This podcast was fantastic, and again, go to my blog if you want to listen to Patrick O'Shaughnessy with Mendelbrot, who runs 10 billion, and the guy's believable. His two largest positions are Microsoft and Google, but 50% of his portfolio is in industrials and commodities. So he's like playing, he just understands investing tremendously, but he's been long Alcoa. What's this one? This is a commodity index.
This is
Yeah, I own a
commodity
little
depths,
bit of this.
but
I've
also
owned a little bit of this for,
the
I don't know,
agriculture
forever.
is also super strong.
Which one?
The agriculture, like all the soft
Yeah.
commodities, grains, obviously fertilizers, extremely strong. Just definitely market leaders.
Congrats to the people that, these were such small percentages of the indexes, so no one was following them, over the last 10 years, right? That was just.
Well, the same tape from 2006, mid 2008 kind of repeats. The only difference so far is that we haven't really seen a big spike in.
Well, there's a war.
Well, definitely a war, but also we haven't seen a big spike in alternative energy. I mean, solar tried earlier in the week to bounce. Still finished green for the week, which is better than the SPY, but it's still so far below its 52-week high.
And then I don't know how you pull up copper, but like everybody needs copper, right? Because the world's gone electric. I mean, the two big things are US dollar. Everybody was like cash is shit.
Yeah.
And it's never been more fun to just be in US dollars. And which I've
definitely
been,
the euro is getting crushed. The European markets are down.
Europe's screwed.
30 to 40%, every single one of them. I mean, Germany is the strongest one. Look at it. It's basically accelerating.
They have no power, they have no energy. They've got to now double their spend on defense. This is the most poorly run. Pissed off Germany. You got France that can't get out of their own way, and they've got nuclear power. You've got a war going on, and everybody's saber rattling. Obviously, the media is just pushing for war, which is bananas. And then you have the airlines already a mess, so we may be bailing them out again.
Yeah, one of the weakest sector last week, obviously, with crude oil.
Well, obviously because of oil, but like my plane to New York was packed diamond, but it was so disgusting, like in the sense that like the seats are smaller, planes are packed, the aisles you can't get by somebody, ticket prices are going up. Obviously, you need a vacation. You need vacation. People need to get away. But there's a war going on too, and it wouldn't take much to escalate things where you're scared to fly. And anyways, this is a tough market. And so for the people that want to have to own stuff, I don't know how you go add to tech here in an environment where they're committed to raising rates and there's no natural buyers of this. Everybody's in the wrong trade.
Well, they might not raise rates, Howard, with the market so weak.
Powell said he was going to go 25 basis points. He said it again.
Nothing, basically, yeah. So.
I understand, but it's also that nothing is the problem, meaning they've said they need to battle inflation. Inflation should go higher, Ivan, based on what we're seeing in commodity prices, right? And if we have to nationalize more industrials, that's even more inflation. Then you've got the electrification of the roads. Everybody's supposedly got to switch to electric cars. And you got Europe, a complete mess. Like you just showed Germany. I mean, Germany, that is dangerous. If Germany is a complete mess. Oh,
okay.
Your cookies are
someone else is going to take care of it. No worries.
What do you have? Guess or has someone else being your significant other?
Yes.
How does she's from Germany, so does she know how their markets are in turmoil?
No, she knows. She doesn't care. I don't think she's invested in German markets. Yeah.
But I think the most interesting here is the dips will get bought in commodities now. So all those people like rushing to buy the dips in tech and color me guilty over the years of buying the dips as well and being overexposed to tech. There's no one more overexposed to tech. But, in December when we started talking about this, it was like time to raise cash. And I was selling stuff I didn't want to sell on Friday, taking off more risk. I never do. I try never to sell into weakness, Ivan, and I found myself really selling stuff on Friday because I don't see the VIX is kind of hanging around 30. I don't see
Or
any
is a
strength.
smart thing to do, I think.
Well, when in doubt, like raise cash, right?
Yeah,
Like, and I'm not the guy who's going to go chasing Alcoa and oil stocks when I know nothing about how the fundamentals really work, and we're in a spike environment. Like, U.S. could go cut a deal with Iran and bring oil down to $60, $70, like overnight, and
yeah. Or Venezuela.
so
Yeah.
like who knows, right? Like the enemy, my enemy. So I'm not going to go buy price spikes, but I just don't think I can buy the dip right now. And so I sold the dip. You know what I mean? And I really try not to do that. So I'm just being honest. Like, I mean, it wasn't even a panic thing. It's just
But you're
responsibility. It's
not
like,
buying
okay,
commodities. You're waiting for a dip right now. You just prefer to stay in
I
cash.
don't think I'm the right person. I think I'm studying it. So I said, go to this podcast. And it seems like copper, aluminum.
Have you at least invested in a fund that specializes
That
in
DB,
commodities?
yeah, that DB, that one that you pulled up earlier. I own some of that.
Oh,
And I own
BBC.
some GLD.
Okay.
So I
So
own
that,
some of this.
yeah, gold as well, super strong,
And I own
silver.
some GLD, but not enough to
Yeah.
make a difference. Like, because I don't have conviction. So, make a few shekels, but just not enough. I don't have conviction about gold. I don't understand the supply and the macro global economics, and I'm too old to learn new tricks. So I think you listen to podcasts, you try and understand the macroeconomics. But for the average investor that doesn't have the time to do this, um, every index that we follow is overweighted to tech. I think the small cap energy patch is probably, I mean, they've been the best winners. No, the small cap energy patch, like the smaller energies. I
Yeah,
don't
I
follow
know
them,
what
but
you
I
mean. I
was,
mean, definitely some of the small cap oil stocks, have gone crazy. What was the name of this one that went up like 600%? I forgot the name last week.
yeah, they're like
But
Oxy Petroleum, all these broken,
yeah,
leveraged. Yeah. I mean,
but
so
yeah,
technically, if you can really spend the time following new tickers and look at the all-time high, like I'm looking at the all-time high lists and the 52, and it's all energy related stocks, and I just don't have enough knowledge. But as a trader, Ivan, I'm sure you've got these already on your screen.
yeah. I mean, for the past 3 months, we've been saying that the current leaders are oil stocks, coal stocks, then fertilizers, just commodity-related names. They're definitely
Yeah.
in a strong uptrend.
Yeah, it's not like we woke up today and this is our first Momentum Monday about this. We've been talking about this
Yeah,
for 3 months.
exactly. We'll be talking about the
Now
same
they're
trend.
just,
And then last week, we're starting to see, defense stocks also starting to perk up, which is normal. Countries are going to spend more on defense. And as I said, I'll be watching for solar stocks. I mean, because if oil is 140, just to me, it makes all the sense in the world to see a major bounce in solar
but
stock.
Ivan, we're so far behind. It'll take
It
10
doesn't
years.
have to happen, but I'm thinking it makes sense. I mean, look at what happened 2006, 2008.
It doesn't make sense. And here's why, because it's so inflationary to make everybody go slow. It's going to take years and years. I'm not saying it's not, and people have front run this trade for a long time, and including me, and I've been burned before. There's no price spikes around solar. It makes sense, and eventually we'll get there. I just don't know how to make that trade. And the lesson learned is, platforms are how I've learned to make money. And this is a tough, when you're trading against true professionals that have been through these cycles before. But yes, we're in some kind of commodity bull market, obviously. But don't think that they're not going to try and get oil back down below, 80 in any which way possible. So buying the dip there can just be catastrophic as well. But wow, look at that
you
US.
have to be
That thing
super
was a
nimble
dog.
in this tape. As you can see, I mean, even let's assume this is the beginning of a bear market that could last potentially a year or more.
Yeah.
And the way I define a bear market is just a major index spending a long time under its declining 200-day moving average. So even in an environment like this, you're going to have some major bounces, that
Yeah.
would last, a couple of weeks or just a week. And even if you just trade on the long side, if you just pick your spots, you can still do well.
No, but I mean, say I'm just looking at Zoom and Spotify, for example. I don't own Spot right now, but I'm looking at Zoom and I'm like,
yeah,
wow,
disaster.
this is not. I bet. Look at what they're going to earn.
73%
Look what
drop.
they're going to earn. This isn't cyclical. Like they're not going to miss their number in 2024. So this thing's trading at 25 times earnings with tremendous cash flow. You know what I mean? So it's hard for me to like swap out of Zoom. It's fine to take your losses, but it's hard for me to swap out of Zoom into Alcoa. Like my brain can't grok for the same position. You know what I mean? Like some people can do that, and that's a full-time job, and that's
Well,
their
we
job.
talked about that situation early in the year, like around 200. Remember, we said that a stock like Zoom right now is untouchable because it's not cheap enough for value investor to get involved, and it's in a downtrend for momentum investors. Momentum investors actually short. So
No man's land.
at some point,
Yeah.
at some point it will become cheap enough. I don't know when, but at some point it will, and then we'll see.
Yeah, but you need to be in a growth environment. So growth investors are over positioned. This is what's happening.
Yeah. I mean, it might take a year and it might drop to 60 or to 40, but at some point, all of those tech stocks that will go down 80, 90, 95%, they'll have some gigantic bounces.
Yeah. Well, these also aren't levered like Amazon was in the internet bubble, right? So these have tremendous free cash flow. They're not like, they don't have convertible death spiral notes on them. So it's a really interesting tech environment in that these companies are not poorly managed. They're just overvalued. And what you have is big money management looking to free up cash to go get, because they're mispositioned for this, the end of the growth trade. And so you have, inflation, rising interest rates, and a war. Not great for growth stocks. You know what I mean? And then you have every hedge fund position long tech going into 2022. And now they've got to reposition to, hopefully they get Alcoa to drop. Like they're hoping Alcoa drops to 70.
Yeah, maybe a couple years from now, everyone will hate tech and no one will want to own tech. And then
you got to go through that process. You just got to go through that process. So, for me, it's high cash and just hide out and peck away at some things, selling some premium, doing some stuff to keep, but just very low exposure. I don't know how to, these are great trends though, man. I guess I don't know when this trend became obvious. I guess in like,
when it becomes obvious,
March 21, I guess March 21.
Yeah,
I guess you'd have to say, this should have been showing up on, it's been a beautiful, March of 2021 was like, okay, the volume was consistent. Wow. Anyways, congrats to those people. What about copper? How do you trade copper?
Well, I showed you this is the copper miners ETF. Yeah. So you can either own that owns all of them, or you can just own some of the individual stocks. Like FCX, it has both copper and gold. Broke out from a big base here.
So, and listening to the people that believe in electric.
There is the Chilean one also broke out. They have fertilizer, copper, and
there hasn't been a copper mine in the last 50 years. So it's like I was listening to some podcasts and I'm like, wow. These are set up really well, but I kind of want more copper than coal. So what was that copper ETF? Sorry,
COPX. That's the copper miners ETF. So you get exposure to all of them.
Yeah, so that's been a 4-bagger. So it's just way better than tech, and it is part of tech because everything electric is going to need copper. So
what was that Canadian company that was also, let me see, TK something. They're also involved in a bunch of metals. Yeah, but anything metals, anything commodities, definitely in an uptrend. And
the question is, does demand? Obviously demand affects these things too. So I wonder why they were so weak going into Oh, the utilities. So it's all defensive shit
So
going.
definitely last week we saw defense, not only defense, but also defensive sectors like consumer
Yeah,
staples
defensive
and
sector.
utilities going up. But obviously here, you ask about why they were so weak. Everything was weak here in March 2020.
No, but they've been weak going into March 2020.
Well, they've been weak for 10 years. Basically, it's been like a really strong 10 years for tech and super weak 10 years ever since they topped here in the middle of 2008.
yeah,
Very super weak period for commodities.
yeah.
So it's cyclical, and right now it's just their turn to shine. And typically, those cycles they don't last just 1 or 2 years. They typically last at least 5, 6 or more.
Yeah.
Those trends.
Yeah.
So who knows?
Yeah, very interesting. Very sad world affairs. And what's the mood in Bulgaria? Like, what are you guys hearing?
People are worried a little bit
Yeah,
that
they should be.
that Russia might want to expand a little bit further west eventually. And
Well,
yeah,
Bulgaria is
it's
not in NATO.
yeah, it is part of NATO, but you know, it doesn't have nuclear weapons or any missiles, so I don't think you
Nobody
know.
wants it. Nobody wants Bulgaria, Evan, but we still love you.
Yeah, sure, if you say so.
No, we
But
do.
yeah, as I said, people are worried. I mean, the entire Eastern Europe is worried, and it should be.
Yeah,
As
Europe is a mess.
you know,
Really feel bad. What going to Italy, but like no one wants it. The GDP is like one. Where's the Italian? Oh my goodness.
yeah, here it is. So I mean, we've talked about it. There's like 30 years of nothing. Obviously, if you don't account for the, I
Yeah, so
think
I'm safe in Italy.
four
No
or
one even
five
wants
percent,
Italy. It's more
four
of
or
a
five
headache to
percent
take it.
dividend that they pay every year. So I guess you're getting some dividend. It's more than,
There's a dividend from this Italy thing?
yeah. I think they paid like 4 or 5%. So 30 years of nothing, but 5% dividend. I guess is better than what you're getting at the bank, right? Bank,
Yeah.
you're getting zero.
It's the same as ARC. It's about the same as ARC.
Yeah.
I mean, I don't get it. I don't know the fascination with like someone can beat the market by sharing their portfolio public. How was that going to end well? It just feels like the hedge funds are just
Well, she made a name
messing
for
around with their
herself, and
portfolio.
she's still managing about $24 billion, and she's
Yeah,
getting paid what, like 1% to do that. So
yeah,
she's
not,
done
not a
well.
horrible life. So
Yeah,
Italy, that Germany chart freaks me out. That's really
yeah. I mean, anything in Europe right now. I mean, this is the entire thing, the European index, like
we're
it's
back at
down.
2007 levels.
It's
Jesus.
down 24%. I mean, it's not as bad, I guess. It could be worse.
No, but I mean, this is not a pandemic. This is not, they're not even at war. I mean, Ukraine's at war, but like Europe's not even at war yet. But they're just so poorly positioned because of energy and the
Yeah,
reliance
exactly. I
on,
mean, 50% of European energy is just imported from Russia. So it's,
so it just blew through the gap, Phil, from December 20. Yeah, this is going to go. I don't know what stops this at this point.
but eventually we'll see real panic selling, and then,
It was the
forced
beginning of
liquidations.
it. There was the beginning of it Friday. It'll continue tomorrow. I don't think we can bottom, and I don't see us bottoming
Let's
short
see.
term
I
here.
think futures are down like what, about a couple percent already. Nikkei down 3%. Europe also down like 3%. So, and as you can see, crude oil up like 8-9%.
Yeah,
All the commodities are up except orange juice. I guess no one wants orange juice,
yeah,
and cattle. That's
yeah,
interesting.
yeah. Well, anyways, I mean, I'm playing it like a wimp.
Well,
Uh,
it's the right time, Howard, to visit Europe right now. Look at you with the euro. The euro hasn't
oh,
been
I'm
so
no
weak
dummy. I'm no dummy.
in forever. So you live like a king there.
Yeah, Italy's cheap in the first place. But if you have to drive anywhere, it costs $700 to fill up your
I
car.
know. You should just hire a donkey or something. It'll be cheaper.
All right. Well, and so how are you looking at it? Wow, what is that? That's your. Well, how are you looking at
Yeah.
this week? You're
Well,
coming in probably flat.
I'm coming 100% cash in the personal account. Like I own like probably 93% cash for my clients' accounts. The rest is the S&P 500, just bought cheaper. And I'm just looking to be nimble and to take advantage of a short-term trends. that's about
Yeah.
it. I mean,
What would you
typically,
look for? What kind of levels are you looking for to try something this week on the?
I mean, at the S&P 500, obviously, let's see where we gap down tomorrow. But I'm thinking that, under 420, we might see a drop to 400. Obviously, with the gap down, we might see an initial demand tomorrow. So
I mean, they're going to have to do something about oil, so that's the wild card.
exactly, and if oil pulls back, then tech is
It
gonna
is interesting to
bounce.
see if the meme traders get a hold of Alcoa where they can have fun with this, because it's like they all of a
Oh,
sudden
they
get
they
fundamental.
absolutely could. I mean, there's some oil stocks that have like 500,000 shares, super low float, and those names, I think we start going to see like big bounces in names like this. Like, what was the one that I was looking the other way? Was it this one?
No.
This one. Yeah, look at this tiny small oil stock kind of setting up
Resources.
for a breakout near 4.
What's the monthly look like?
The monthly, here we go, the monthly. So it,
Yeah.
it kind of
So,
has a room to jump to 5 or so,
yeah.
6 maybe.
Yeah.
So I mean, it's a hot sector, and when we have that a hot sector like this, we definitely start to see like the small cap names
Yeah.
make
But at the same time,
ginormous
in
move.
big cap, Apple, I just am shocked that like
Apple is holding so
Apple,
much better than the rest of the market. Like, I mean, if you
I
could
don't
just
get it.
compare it, it's down only 11%.
I guess it's like a utility company at times like this.
The one that kind of, people should be paying attention is this one, Taiwan
Mhm.
Semiconductors. We talked
That's a
about it
mess.
last week. They're the biggest, literally the biggest manufacturer of smart chips. I think they account for like 75%, if not more, of the production. So anyone, NVIDIA, Apple, Qualcomm, anyone relies on them to make it. And that's why I'm paying attention to this. If they're breaking down, the
Yeah, where's the semi
semiconductor.
index? I mean, it's so elevated.
SMH, yeah. I mean, it went up so much in the past.
I understand, but below this like 230, I mean, there's nothing there to one. I mean, you got to be really careful.
Yeah, definitely we can see a big drop in this one.
Big.
I
There's
mean,
just that is
look, lower
heavy.
high and now setting up near the lows. If it
I
loses
tell
these
you what, man,
lows,
that's if I
it could be
was
a
going to
quick
try and
drop.
play catch up, I don't own semis, but man, that is not pretty. And there's nothing below. Anyways, it's not fun. I mean, in the end, I don't want short stocks. I mean, this is a place to protect capital, protect capital. Growth
Exactly,
will
yeah.
return at some point, but he said there is just people are mispositioned, and I don't think they realize how much damage even just a little
They're
exposure.
mispositioned, but they also most people believe in recency, are impacted by recency bias. I mean, tech has done so well for the past 10 years that no one believes that it can drop 70, 80, 90%.
Yeah,
Some
I
of
was going
those
to say,
stocks.
pull up Spotify, for example. And I'm like, I use this app more than anything, right? I was on the plane listening to podcasts. So what's the valuation back down to?
26 billion.
I mean, this is a brand that's worth 100 billion. You can't replace it. I know Apple's got the same app and Amazon Music, but sorry, I don't know. Do you use Spotify?
I use it, yeah.
Yeah, I don't use an app more. I use it more than Netflix. It's just fascinating to me.
Netflix also doesn't look, pretty,
Oh,
but
oh my God.
let's
But
see.
again, like these companies have so much cash flow. So again, I don't know. I'm confused. So when I'm confused, I'm cash. So I wish I could be more positive, but I'm not paid to be positive. I'm paid to be realistic. And I'm hoping we have better news next week. And then so in like what is the news, Ivan, you're getting from Bulgaria? You got family there. Like people are worried, huh?
People are worried. People are exchanging the local currency into dollars and some euros, even though the currency, the Bulgarian lef, is pegged to the euro, so they shouldn't. But people are still worried.
Still
And
want US dollars. Yeah, look at the US dollar here. And I know
yeah,
like the cash is trash
and
people. I mean,
someone even looking at renting houses, in Western Europe for a little bit, just until the situation
yeah,
dissipates.
listen, better to be safe than sorry if you
Yeah.
can. Anyways, I don't know what's on the other side of this dollar run because this is what a flight to safety looks like. You get T-bills. You
I
got,
mean, you saw the chart of the euro, right? We show here it is. I showed it to you. It's just it's a pretty significant drop.
The euro is not something I've ever really believed in, but U.S. dollar, until it's over, it ain't over. All right, buddy. Have a great week.
All right, Howard. Enjoy your time in Europe.
Everybody. Thanks.
Bye.